Welcome to U.S. Form's Coach. My promise to you in every single explainer on this channel is this. By the time this lesson ends, you will know exactly what to do next. No confusion, no guessing, no wondering if you filled something out correctly. Just clear, confident, step-by-step guidance from start to finish. That is what we do here every single day. If you're a foreign entity doing business with a U.S. company, you've probably had the dreaded W-8BEN-E dropped right in your lap. So settle in, have your documents ready, and let us walk through today's lesson together, one step at a time.
Okay, let's pull up our roadmap for today. First, the 30% tax threat. Second, W-8BEN versus W-8BEN-E. Third, decoding the IRS jargon. Fourth, navigating the form safely. And finally, common errors to avoid.
All right, Section 1, the 30% tax threat. Let's start with the most important question. Why? Why are you being forced to fill out this incredibly complex paperwork in the first place? Well, it all comes down to the extremely high stakes of getting it wrong.
30%. That is a massive and, frankly, kind of a terrifying number. By default, the IRS forces U.S. companies to legally withhold 30% of your U.S.-sourced income. Whether you're providing software services or receiving dividends, 30% of your money just automatically stays in the U.S. unless you submit the correct form to claim a reduced rate under a tax treaty. This form is literally the key to unlocking your full earnings. It's that simple.
Moving on to Section 2, W-8BEN versus W-8BEN-E. Before you even write down your name, you have to figure out which form you actually need.
Picking the wrong form means an automatic rejection. But the dividing line here is actually remarkably simple. It all boils down to whether you operate as a person or as a formal entity. If you're an individual investor, a salaried professional getting U.S. income, a freelancer, or a sole proprietor, you go with the W-8BEN. But if you operate through a registered entity, think private limited companies, LLPs, partnership firms, or trusts, then the W-8BEN is your form. So for example, a solo freelancer in India, W-8BEN. A Bangalore-based IT company receiving consulting fees, W-8BEN.
Section 3, decoding the IRS jargon. Before we look at the actual form, let's translate all this intimidating IRS alphabet soup into plain English.
First up, we have FATCA. That stands for the Foreign Account Tax Compliance Act. Whenever the form asks for your Chapter 4 status, it's literally just asking how you classify your business under these FATCA rules. You just have to declare this status to prove to the U.S. government what kind of operation you're running.
Next, you're going to see the acronym FFI plastered absolutely everywhere. It stands for Foreign Financial Institution. Think banks, credit unions, investment funds, things like that. If you are just a standard, non-financial business, like a tech startup or a marketing agency, you do not fall into this highly regulated bucket. Which is great news, because you can safely ignore the massive sections of the form dedicated entirely to FFIs.
And that brings us to where most standard operating businesses actually land, an active NFFE. NFFE stands for Non-Financial Foreign Entity. If your business makes its money from active, everyday operations, meaning less than 50% of your gross income comes from passive sources like dividends, interest, or rent, then boom, you're an active NFFE. Seriously, knowing this one single definition will save you an immense amount of time.
Section 4, navigating the form safely. Now that we've decoded the jargon, let's jump into the actual paperwork and highlight the safest, quickest path through it.
When you first open up the PDF, you're going to see that it's 8 pages long. Deep breath. Do not panic. That page count is highly deceptive. Because this form has to account for every obscure financial institution on the planet, most standard entities only need to complete a few very specific sections. You're going to leave the vast majority of those 8 pages completely blank.
Notice the header right at the very top of the document. It clearly states this is exclusively for use by entities. Individuals must use Form W-8BEN. That's your final sanity check to ensure you're actually filling out the correct paperwork before you start.
So the most crucial section for you is Part 1, specifically boxes 4 and 5. This is where you put those definitions we just learned to work. In box 4, for your Chapter 3 status, you just check your basic entity type, like a corporation or a partnership. Then, right below it in box 5, your Chapter 4 FATCA status, you find your classification. If you're a standard operating business, you check the box for active NFFE. And just like that, you have successfully handled the hardest part of the entire form.
Now, while Part 1 is mostly straightforward, the IRS does have a few hidden warning signs you really need to heed. Be super careful with Line 2, where you enter your country of incorporation. Also, pay special attention to Line 3 if you operate as a disregarded entity, which basically just means your business is separate from you legally, but disregarded for tax purposes. If that's you, you absolutely must follow the specific naming instructions so the IRS knows exactly who is receiving the payment.
So let's zoom out and look at our simple 3-step map for a standard business. Step 1, complete Part 1 to identify yourself and declare your active NFFE status. Step 2, skip all the way down to Part 3 to claim your tax treaty benefits. This is the magic step that protects your income from that 30% withholding tax. And Step 3, jump to the very end, Part XXX, to sign, print your name, date it, and check the certification box. That is your safe path straight through the maze.
Section 5. Common errors to avoid. Before you confidently submit those documents to your U.S. client, we need to point out the quicksand.
We're looking at some fantastic data compiled by Citi Treasury and Trade Solutions from reviewing their own clients' forms. Payer platforms are incredibly strict about this stuff because they're the ones legally liable to the IRS, so they will bounce your form back for the tiniest formatting issue.
Let's run through these exact traps. First, do not abbreviate your legal entity name unless it's an official part of the company type, like LTD. Second, if you leave off your taxpayer identification number or TIN, that's an automatic rejection. If you want those treaty benefits, you must provide your foreign TIN or a U.S. TIN. Third, make sure your permanent address is fully filled out: street, city, state, postal code, the whole shebang. Fourth, always print your name in the signature block. Just scribbling a signature isn't enough. And finally, and I cannot stress this enough, never ever use whiteout or cross out information. If you make a mistake, toss it and start fresh. Any alterations immediately invalidate the document.
I want to leave you with this incredibly reassuring quote from Cornell's General Guidance on the Form. They say, all 8 pages of the W-8BEN-E form do not need to be completed. For most of you, it's really just parts of page 1, maybe page 2 for your specific NFFE status, and then that signature on page 8. I love this because it cements the fact that with the right guidance, taming this bureaucratic monster is entirely doable. It's not about doing more work, it's just about doing the right work.
So here's the ultimate question. Are you ready to claim your treaty benefits? You know the difference between the forms now, you've translated the FATCA jargon, you've got the exact map to navigate those 8 pages, and you know exactly what quicksand to avoid before you sign. You now have the step-by-step knowledge to safeguard your hard-earned income. Keep this explainer handy the next time a vendor portal asks you for tax documents. Take a deep breath and confidently secure what is yours. Remember, the IRS is banking on your confusion to hold on to that 30%. The real question is, are you going to let them?